All right, so question for you. You have an extra $1,500 a month. Should you A, throw it at your mortgage to pay it off faster, or B, invest it to build long-term wealth? And one path will give you peace of mind, which is a home paid off earlier, while on the other side, it could potentially build you an extra $600,000 or more over the next 20 years. In 2025, this is the one of the most important and most misunderstood financial decision homeowners and real estate investors need to make. And in this video, I'm going to walk you through both strategies using real numbers, current market context, and a decision framework I use with my clients. Plus, I'll show you a third option most people don't even know about, but it's probably one of the most important. So stick around, let's go. Hey, it's Mark Belanger. Real estate is more than buying or selling. It's one of the best ways, obviously, to build real wealth. And that's why I help homeowners, professionals, and investors here in Ottawa make smart moves that align with their long-term goals. And if you're looking for real guidance and not just another transaction, just give me a call or shoot me a text. My contact details are below. Let's have a quick chat, no obligation, no pressure. I'd love to hear more about your plans, and let's see if this is the right fit for both you and I. Now let's get back to the video. Okay, so let's talk about why this question matters so much right now. Mortgage rates shot up, then they cooled down, and some of you may be sitting on mortgages of 3 to 5%, which is, in the big picture, relatively cheap debt. Others, on the other hand, are closer to 6 or 7%, and these people are definitely feeling the squeeze. Meanwhile, Canadian home values stayed strong, and equity is up, and many homeowners now have extra cash flow to work with. So you ask yourself, do I play it safe and do I wipe out that mortgage faster, or do I invest that cash for bigger long-term gains? That's a smart question, and the answer obviously depends on your current situation. So let's break it down. All right, so let's discuss these options. The first option is we're going to pay down the mortgage faster. So let's just say, for hypotheticals, you've got a $400,000 mortgage at 4.5%. Your standard payment is roughly $2,000 per month. Now, imagine that you're going to add $1,500 extra every month towards your principal. You'd pay that mortgage off in just under 16 years, and you'd save yourself about 120 grand. Now that's a guaranteed return. No market swings, no surprises, just predictable math. And beyond the savings, there's an emotional ROI. And clients tell me all the time, when my mortgage is gone, I'm finally be free. But there's a trade-off. And that money is locked into your property and it's not liquid. And if life ever throws you a curveball, which it likely will, you can't access that money easily. And with inflation still hovering, your real borrowing cost is lower than it looks. So while you're saving, you might also be missing out on something bigger. All right, so let's discuss the other side of it. So we take that $1,500 from the previous example, we take that $1,500 a month and we invest it instead. And we'll be using a conservative 7% annual return. So you grow that money to $785,000 over 20 years. So compare $785,000 compared to the $120,000 in interest savings from the previous example. Well, that's over $660,000 in potential gains. And it doesn't have to be stocks. You can put this money into potential rental property, a real estate development, or a passive investment that pays monthly income. When you invest, your money stays flexible, it compounds, and it can be diversified, and it may come with tax advantages too. But let's be real, this route has many risks. Markets can dip, projects can underperform, and most importantly, you have to stay consistent with your $1,500 per month every month. So saying that I'll invest is different than actually doing it month over month consistently. All right, so what's the right move here? Let's use the same 3-question framework I walk through with my clients all the time. Question number 1 is, what's your mortgage rate versus your potential return? If your mortgage rate is under 5%, investing might give you a higher yield. But if your mortgage rate is above 5% and is lingering around 6 or 6.5%, early payoff starts to look very appealing. And question number 2 is, what's your risk tolerance? You gotta be honest with yourself. Can you handle the emotional ups and downs of the market? Or do you sleep better knowing that your debt is disappearing month over month? And question number 3 I ask all the time is, will you actually invest the difference? This only works if you stick to the plan. Because if that $1,500 ends up in your checking account, or worse, it gets spent, You're not investing, you're simply consuming. All right, so let's discuss the hybrid strategy. And this is where my clients get the biggest long-term results. And I call it the hybrid wealth plan because it's quite obvious what it is. And it actually kind of blends the security, liquidity, and the growth aspects of your strategy. So think of it this way. You should be, or you are, meeting your doctor once a year, and you should be, or you are, meeting with your financial advisor once a year. What would prevent you and I to meet up on a yearly basis, have a cup of coffee, and discuss what is likely to be your largest financial investment, which is real estate? And when we do have that coffee on an annual basis, we'll discuss things like what's happening in the market. Like, you need to know where we are in the current market. What's your home worth? And whether or not your personal goals have changed. So think of it as a sort of a real estate checkup to keep your financial plan on track. All right, so now we're meeting up on an annual basis. We're discussing all things real estate. We're having coffee once a year. We're talking about your plans and everything else. Everything is good. Now, let's go back to the $1,500 extra per month. And this is what a hybrid plan could potentially look like. I present to you a $750 per month private real estate fund. We discuss some options. We see what's available in the multi-unit space, the private space, etc. You put $500 towards a diversified market investment. So you're basically investing into the S&P or the TSX or whatever. And you add an additional $250 towards extra mortgage payments. So in this scenario, you have some for growth, some for safety, and some for flexibility. And the following year, well, we'll revisit it. We'll have another coffee. We adjust, we optimize, we lather, rinse, repeat. We do this year over year, and we keep rebalancing your investments and rebalancing your portfolio from a real estate and investment perspective. All right, I think I'm going to wrap up the video here. So what we've learned in this video is that paying down your mortgage early brings peace of mind and it guarantees savings. And that much we know and we really appreciate. On the other hand, investing that money can grow your wealth far beyond what you would be saving in interest, which is also really good option or a good choice. But for most people, the smartest choice is some sort of a hybrid model that evolves as your life evolves. Your real estate isn't just where you live, it's a tool to create freedom, flexibility, and long-term security if you use it strategically. And obviously that's where I come in. If you want to have a free consultation, no obligations, no nothing, let's just schedule a quick 15-minute or a half an hour call. Let's discuss what your short and midterm goals are, and let's see if you and I are on the same page and whether or not I can help you in your real estate journey. So I hope you enjoyed this video. If you did, please consider giving me a thumbs up. I would really appreciate it. And until the next video, take care. Hey, I hope you enjoyed that video. Now, whether you're planning a move or you're looking for the right investment here in Ottawa, I'm here to help you make a smart, confident real estate decision. And I work by referral, so my business depends on how well I serve you. And think about it, if you're not thrilled with the experience, you simply wouldn't recommend me. And that's why I go above and beyond to deliver the results that exceed expectations. So if that sounds like the kind of relationship you're looking for, give me a call. You've got my contact details. Let's schedule a quick call. No pressure, no obligations whatsoever. Let's talk about your next chapter, and I hope I can help, and we'll see you on the next one.